Eric Muathe, Muathe.com with world market analysis for the weekend of March 25th and March 26th, 2017. Let's take a look at the Australian markets here as we begin with. I'm going to have a lot of daily chart videos, and my assumption is you had a chance of reviewing last weekend's market analysis video. Now, to summarize it, from last weekend, we saw that many of the major time frames, for example, if we take a look at the monthly charts and the weekly charts for most of the world markets, they still continue pointing down. So keep that in mind, that this is a follow-up from last weekend's market analysis video where for the most part monthly charts continue pointing down, weekly charts continue pointing down. But in this video, I want to take a look at short-term possibilities of a bounce on many of the markets. Let's begin with the Australian market. And we can see here signs of a sideways to higher market as of right now on the daily chart. If you take the lows on the daily RSI, you can see we tagged this line over the last 2 days and held. Keep in mind we are trading within what looks like a nice wedge, which might suggest a sideways market. Also, there's a line going back to the lows here of February. So this RSI movement, so we can draw a line from there, and every time we bounce on this line we should have the market moving higher. So let's test that theory. We bounce on this line with uniform activity, double bottom there. Here we held for the lows here and here. We go back above the line here for these lows. This eventually yields to a movement back above the line for a re-entry here. We come close here for the lows, and over the last couple of days we held that line and we are already moving forward. So we can see here that on the daily, if you take those two lines, there's a good argument here that the market is poised for a day-to-day bounce, or at least let's call it some type of stability. If you take the RSI lows line, and also if you take the previous and the current support line going back to the lows of last year. So let me draw that again, this line right here. So as long as the market is holding on those two lines, that's a stable market at the very worst. Now of course we know that at some point if we come back and break below those two lines, that would be a signal visually that the market is due for another major pullback. So right now we ended the week with support, so let's just say that the market at the very worst is stable based on support on these two lines. Now you're gonna see this in many markets as we go forward in this video. For example, let's take a look at the Chinese market. On the daily, we can see that the daily is showing signs of holding this RSI lows line. So that's decent support on the daily chart unless we break that line. We also seem to be forming topside RSI resistance. Again, we see a market that is forming a wedge. At some point a decision is going to be made as to whether the market has enough strength to move higher by staging a movement above the line for a move higher, or breaking below the wedge for a move lower. But at the conclusion of this past week, we can see that definitely we are trading within that support line based on support on the lows, and we got topside resistance. So the market here confirming that it is still in a sideways range. Let's take a look at another market here. We take a look at the Japanese market, and we can see here if we take the RSI lows line, a simple line connecting the lows, going back to the lows here and touching these lows, touching that low. We see that we held that line as of the last 2 days. So that's good enough support. So that's why I'm saying the daily charts are showing signs of stability. Now keep in mind, let me bring that line again. So this is a well-defined line of support that is almost 12 months long. Now, if the market were to break this line, if it breaks this line, when it breaks this line, that would be a sign of a market that is ready to drop. At the same time, we can also see that there's a line that we can draw coming off the lows here, lows of mid last year. So we draw a line here. This was the RSI movement that coincides with these lows, and the market has moved higher since then. Alright, so we take that information and draw a straight line, which is our uniformity resistance line. Check the description for more about this. And we just draw a line like that. We can see that we came close to the line here for the lows there. We touch that line with uniform action for the lows here. And over the last 2-3 days, we touch that line. And as of right now, seems like we are holding. So day to day looks like here's another market that is showing stability, maybe sideways, maybe even for a bounce. At the same time, we know that if we break below that line, that is going to be confirmation that the market has finally failed to hold support and is due for a bigger correction. If we take a look at the Hong Kong market, which was trading at highs this past week with a good breakout, but we see signs of negative divergence. We can see an improvement in prices here, but the RSI made a lower high. So that negative divergence could set the stage for a pullback. Also, we can see that the line that gave us a short-term pullback, this line here, was being tested. So we pull back here. Generally, that tends to be a warning high. We tried to move above this line here. We were rejected. So we can see here on the daily chart signs of potential reversal here on the daily, unlike the other markets that we are looking at. Take a look at the weekly chart. The weekly chart is also showing signs of coming back to test this recent break. The break here in October brings the market lower. So we draw a line from there. And you can see that over the last couple of attempts, over the last 2-3 months, trying to move above this line continues to be a challenge. So even though we see that we are breaking out in terms of price, the RSI has yet to prove itself. So if this market, the Hong Kong market, is to trade well and move higher, it needs to clear this blue line. Otherwise, confirmation of resistance on this line might still suggest that the next meaningful direction is lower. Now that would make sense, because if you take a look at the long-term monthly chart, and here we have 10 years of monthly data, and we draw a trend line here. Should be something like that. This was a major break. So let me draw that. Trend line break here was broken, and once we broke below that, we dropped in 2015. So pretty much what we are doing is coming back to test this line here, this break line. And as of right now, it still remains a challenge. We haven't really moved above that line. We need to clear that resistance level if the market is to trade higher. So this is the challenging area here. We failed in February, I believe, and as of right now, this is still trouble area. We can also see that this connects very well to the previous break on the monthly RSI. This RSI break brought the market lower, and we are coming back to test that same level. So bulls would want the market to clear this line. Otherwise, month to month, failure to break out here might suggest that the next meaningful swing trade is still low. Let's take a look at the Nifty, and we can see here on the daily, just to be consistent with other markets, there's an RSI support line on the daily that is coming in play. So as long as this line is holding, we can expect the market to be sideways to bullish. So that's a simple line to watch for either a sideways to bullish market. And at the same time, we know that if we break below that line, that would suggest that we are due for a pullback lower. So a simple line. There's also another line which we've been watching for guidance. It's this line, the previous RSI breakout line. What we can do here is take this line here, this entry of this movement. The market has been successfully holding above that level. So you can see ever since that movement here, we've been higher. So take that information, draw a straight line from here. And you can see that the market has been using that line for bounce, support here on the line for this re-entry, support here on the line for this re-entry here, and over the last 2 days, support here for this re-entry. So as long as those two daily charts are holding, the blue line in front of you and this line here, the RSI lows line, as long as these two lines are holding, then the market should be stable to bullish. And at the same time, since the lines are well defined, if we break below those two lines, that would be a short-term sell signal. Take a look at the Bank Nifty, and similarly here we can see that this is where it broke out. The break moved the market higher, so this entry here in the RSI corresponds with this daily move. Of course, since then the market is higher, as we can see. So we take that information, draw a straight line, something like that, and what we see here is the market's been bouncing on that line. Bounce for this re-entry, bounce here for this re-entry, and now a bounce here with uniform activity for this re-entry. In other words, as long as this line is holding, the market should be stable. And at the same time, if we happen to break below that line, that's gonna be a sell signal. If we take a look at the South African market, we can see topside resistance on the weekly chart. That's one layer of resistance. There's also another line from the recent break. So the RSI broke down here, which happens to be that level. This break brings the market off the highs here of 2016. We draw a line from there, and we can see that the market is unable to move above that line also over the last 2 weeks. So as long as we are seeing weekly resistance on that same level, we have to assume that the market needs to confirm strength by moving above those two lines. The more it can't move above those two lines, the more it suggests that the next major swing trade for the South African market is lower. Take a look at the daily, and the daily chart has topside RSI resistance coming in play over the last couple of days going into a week. We got double top resistance on that line, as you can see here, double top resistance. Again, until we move above this red line, this market remains challenging or challenged. And if we take a look, actually what is confusing here is on a long-term picture, we are seeing good support, as we saw uniform activity support above the RSI 50 level for this re-entry. Here we held the RSI 50 level, which is stable. So on a long-term monthly chart, the confusion here is that the monthly charts continue to be stable. The last time we went below 50 back above it here with uniform action was very successful in 2003. So as long as the market is bouncing on its monthly RSI above that RSI 50 level, as it is doing here and here, this market continues to be sideways. So I would say a little bit of a confusing picture in terms of day to day, week to week, but we can see that week to week negative, day to day negative, but we see that the longer term picture continues to be constructive. If we take a look at the European markets as a whole, we can see daily support line, topside resistance. So definitely stuck here within a wedge. At some point, if we can break out, that would be bullish. So a breakout above that line would be bullish for bulls. At the same time, a breakdown below that line would be bearish. Now if we take a look at the German market daily, we can see what we've seen in other markets, which is support based on RSI lows. So this is holding, suggesting that day to day the market did find support, and that now we are due to a sideways to bullish market because of this RSI low support. The market is also bouncing nicely back above RSI 50. The last time it bounced back above RSI 50 with uniform action was for the lows here, and again here for these lows. So it looks like day to day it is holding exactly where it needs to hold. So the bulls are making a good defense of this line. At some point, should we break below this line, then we can expect lower prices. Take a look at the FTSE day to day. It is also coming back to test the recent RSI lows line, as you can see, connecting the lows here, here, and now over the last couple of days there. As long as this line is holding, we can expect the market to be stable. Otherwise, if we break below that line, that's going to be a sell signal. If we take a look at the French market, we can see another wedge formation. Sentiment is forming a nice wedge. You got bottom side support, top side resistance. So clearly here the stage is set for either a movement to the upside. So by moving above that wedge, the market would be breaking out, which would be bullish. And at the same time, if we fail to do so and we break below this wedge, that's going to be a short-term sell signal. After a shallow pullback here by the Canadian market off the highs there, keep in mind on the monthly chart, Canadian market has failed to break out off the highs of 2015. But on the daily, we can see that this is showing signs of support going back to the lows of early 2016. So the market bounced on this line the last couple of days. As long as this line is holding, we can assume that the market is still sideways to bullish. Otherwise, failure to hold that line, if we break below that line, that's going to be definitely a sell signal. Let's take a look at the Brazilian market on the daily. We can see that the daily chart, after a pullback here, which if you've been watching my weekend videos is no surprise, we can see that day to day, as we see in other markets, it is coming back to show support on this RSI lows line. So that line held, and as long as this line is holding, we can now expect the market to be at the very worst sideways, maybe even a bounce. At the same time, if we break below that line, that's going to be indication that the market wants to probe lower prices. So it's a simple straight line. Support is good. Failure would definitely mean lower prices. Let's end this world market analysis by taking a look at the Dow Jones, and we can draw a line connecting RSI lows. And as of Friday's close, you can see that the Dow closed exactly on this line. So either we are going to get a bounce on the line, suggesting that the next swing trade is higher. So holding on this line might suggest that we are due for a bounce. Failure to hold that line, as we've seen in other markets, if we break below that line, that's going to be a change in sentiment, suggesting that the market is due for a bigger correction. So we'll see which way the market decides. Either we get support or failure. Eric Muathe with Muathe.com. Enjoy your weekend. Good luck, peace, and blessings. Woo!